Hey. Welcome back to the second edition of TaxFlow to CashFlow. I am your host, Denise Givan. Now, for those of you who I have not introduced myself to, let me go ahead and tell you who I am and what I do. I am Denise Givan, and I am also known as the tax strategist. I equip entrepreneurs with the skills and knowledge to legally eliminate high tax liability and reinvest those savings back into their business. When you work with me, you will not only see a significant reduction in your tax burden, but also gain the confidence and clarity to grow your business and maximize your profits. Now, the last time we talked about the importance of understanding your tax flow and how it directly impacts your cash flow. Today, we're going to tackle a topic that literally can make or break your business finances. Choosing the right business structure. Now, believe it or not, the business structure you choose can have a massive impact on your tax liability, your legal obligation, and believe it or not, the business structure you choose can have a massive impact on your tax liability, your legal obligations, and ultimately your bottom line. In fact, choosing the wrong structure could end up costing you thousands of dollars in unnecessary taxes and fees. But don't worry, I'm here to help you navigate these waters and make sure you're set up for success. So let's dive into the nitty-gritty of business structuring. Let's start by discussing why business structure is so important. At its core, your business structure determines how you will be taxed, how much personal liability you'll assume, and what kind of paperwork you'll need to file. One of the biggest mistakes I see entrepreneurs making is not giving enough thought to their business structure when they first start out. They might default to a sole proprietorship because it's the simplest option, or they might jump into forming an LLC because they've heard that it's the best choice. But here's the thing. What works for one business might not work for another, and the consequences of choosing the wrong structure can be significant. For instance, let's choose a structure that exposes you to too much personal liability. You could be putting your personal assets at risk. And on the flip side, if you choose a structure that exposes you to too much personal liability, you could be putting your personal assets at risk. And on the flip side, if you choose a structure that doesn't offer enough tax advantages, you could end up paying way more in taxes than necessary. That's why it's crucial to understand the different types of business structures and how each one affects your business. Now, let's break down the most common business structures and what you need to know about each one. Now, let's talk about the simplest form. That's the sole proprietorship. Now, this is the simplest and most common business structure, especially for small businesses and freelancers. As a sole proprietor, you and your business are essentially the same entity. It's you doing business as yourself. This means you're personally responsible for all debts and liabilities of the business, and your business income is reported on your personal tax return. Now, let's talk about the pros of a sole proprietorship. Easy and inexpensive to set up, minimal paperwork, and complete control over your business. Now, here's the cons. No liability protection. Your personal assets are at risk if your business is sued or incur debt. Also, you might end up paying more in self-employment tax since all income is subject to these taxes. Now let's go ahead and let's talk a little bit about a partnership. Now, if you're going into business with if you are going into business with one or more other people, you might find considering a partnership. In a general partnership, all partners share responsibility for the business's debt and liabilities, and profits are passed through to the partner's personal tax return. Now, I don't want you to have a bitter taste in your mouth about partnerships. I, at one point, was like, partnerships are not like me. But listen, let me tell you, partnerships can be a good thing depending on if you have a good partner. So let's talk about the pros. Now, it's relatively easy to establish. With more resources and shared responsibilities, partners can also bring complementary skills to the business. Now, whenever there's a pro, there has to be a con. Like a sole proprietorship, general partnerships offer no liability protection. Plus, conflicts between partners can arise, and each partner is responsible for the actions of the other. Limited liability company, also known as an LLC. An LLC is a hybrid structure that offers the liability protection of a corporation with the tax advantages and flexibility of a partnership. LLC owners, known as members, are not personally liable for businesses' debt and liabilities. Now here's the pro. Liability protection, flexibility in management, and pass-through taxation. That's a great thing. Meaning profits are taxed only once on the member's personal tax return. Now let's listen to the con. Now, more paperwork and higher setup costs compared to a sole proprietor or partnership. Also, self-employment tax can still be an issue, though you can elect to be taxed as an S Corp to potentially reduce these taxes. Now let's talk a little bit about a corporation. Now, a corporation is one of my favorites, and this is the one that I favor the most. But let's listen to the pros and cons of a corporation. Now, a C corporation is a legal entity that is separate from its owners, providing the strongest liability protection. It can raise capital by issuing stock, and it pays corporate income taxes on its profits. That's why it's my favorite. Now the pros: strong liability protection, ability to raise capital through stock sales, and potential tax benefits like deducting employee benefits. Now, there's always a con. Double taxation. Profits are taxed at the corporate level, and then again as dividends to the stockholder. More complex and expensive to set up and maintain, with significant paperwork requirements. But let me just share this with you. Corporation, the thing that resonates with me the most with a corporation is a legal entity that is separate from its owner, providing the strongest liability protection. So that is why I favor it the most. You want to be protected while you're in business. So let's move on to the S Corp. Now the S Corp, a lot of my friends who are CPAs, they favor. Now let's move on to the S Corp. A lot of my friends who are CPAs, they favor the S Corp. An S Corp is a special type of corporation that allows profits to be passed through to its owner's personal tax return, avoiding double taxation. It offers liability protection similar to a C Corp. Now let's talk about the pros: pass-through taxation, liability protection, and potential savings on self-employment tax. since only wages, not distributions, are subject to payroll taxes. Now, let's talk about the cons. Most restrictive in terms of ownership. S corps can't have more than 100 shareholders, and all shareholders must be U.S. citizens or residents. Also, there are more formalities to adhere to, like holding regular meetings and maintaining corporate minutes. Now, we've heard the different types of structures. Now, think, how are you structured? And are you getting the full tax benefit from the way you're structured? So now that we've gone over the basics, let's talk about some common pitfalls that entrepreneurs encounter when choosing a business structure and how you can avoid them, overlooking future growth. Now, one of the biggest mistakes is not considering your future plans when choosing a structure. For example, a sole proprietorship might work well when you're just starting out, but if you plan to grow and bring on employees or investors, an LLC or corporation might be better fit. Also, think ahead and choose a structure that can evolve with your business. Now, number 2, let's talk about the second pitfall, ignoring tax implications. The tax implications on your business structure are huge. For instance, a C Corp might provide limited protection, but the double taxation can be a significant drawback unless you're able to offset it with other tax advantages. Now, on the other hand, an S Corp could save you money on self-employment tax, but it comes with stricter rules. Now, to make sure that you're making the right decision, work with a tax professional or a tax strategist to understand how different structures will impact your tax liability. Now, that's where I come in handy. Number 3, not considering liability protection. Liability protection is crucial, especially in industries with high risk. If your business involves significant liability, like construction, health services, or manufacturing, operating as a sole proprietor could put your personal asset at risk. In these cases, an LLC or corporation is often a safer choice. Number 4, failure to follow formalities. If you choose an LLC or corporation, you need to follow certain formalities, like holding regular meetings, maintaining minutes, and keeping your personal and business finances separate. Failing to do so can result in losing your liability protection, which could be disastrous if your business faces legal challenges. Now, so what happens if you choose the wrong structure? I get asked this question all the time. Now, the answer is the consequences can be severe. So, let's go over a few reasons why choosing the right structure can help you. So, what happens if you choose the wrong structure? The consequences can be severe. Now, let's go over some of the severities of choosing the wrong structure. Higher taxes. If your business structure isn't optimized for your specific situation, you could end up paying thousands more in taxes than necessary. Now, for example, a sole proprietor might pay more in self-employment taxes than someone who has structured their business as an S Corp. Now, personal liability. Without the right liability protection, your personal assets like your home, car, and savings could be on the line if your business is sued or incur debt. This is particularly risky in high liability industries. And then the third severity, missing opportunities for growth. Choosing a structure that doesn't align with your business goals can stunt your growth. For example, if you want to attract investors, a C corporation might be a better choice than an LLC. Or if you plan to expand into multiple states, A structure with more legal and tax flexibility could save you a lot of headaches down the road. So, how do you choose the right structure for your business? Here are a few tips that can help you. So, how do you choose the right structure for your business? Here are a few steps you can take. Assess your needs. Start by evaluating your current business needs and your future goals. Are you starting out or are you planning to scale? Do you need liability protection or are you more concerned with minimizing taxes? Your answers to these questions will guide your decision. Consult with professionals. Don't make this decision alone. Consult with a tax professional or tax strategist and a business attorney. Consult with a professional, the pros and cons of each structure, and choose the one that's best for your business. Review and reevaluate. Remember, your business structure isn't set in stone. As your business grows and changes, you might need to reassess and possibly restructure. Regularly review your business needs and consult with an advisor to make sure your structure is still the best fit. Now, as we wrap up today's episode, I want to encourage you to take a close look at your business structure. Is it really the best fit for where you are now and where you want to go? If you have doubts, now is the time to make changes. And if you want to dive deeper into these topics and get hands-on help with choosing the right structure, I would like to invite you to join me at my 3-day workshop, September 16th through the 18th. We'll cover everything you need to know to ensure your business is structured for success and ready for season. Now, I am Denise Givan, your tax strategist. And don't forget, subscribe, because I do not want you missing out on episodes to help you take your business to the next level. Until next time, stay tax savvy.